Welcome, everybody. I'm Tracy L, tracylclark.com. You guys know me. We always focus on the change and the shift and the better health, wealth, intuition, and all things wonderful. We are here today with one of our favorite friends, Jeremy from Gilt How Well, Jeremy Wiseman. And what we're going to talk about, and I really want you to pay attention, is something that we get in the precious metals industry. Now, you guys know we love dealing with Jeremy for many, many reasons because honest, reliable, and really answers your questions. It's not that salesman thing, which many of you have said to me, Jeremy, it's one of the reasons they love you. So we are so happy that he's been able to join us today and talk about things that I know go behind the scene, primarily as metals are growing and storage fees and all these questions that people have. We're going to try to answer them today for you. And so I'm happy to have you stay tuned to the end so you can learn to not only just, preserve your wealth, protect your wealth, but look at things from a new angle from one of the experts. So, Jeremy, I'm really happy that you are here with us today because our community loves you. The people around have just great, great, great things to say about Gilt Hall Wealth and how amazing you guys have been. So, first, I want to start by saying thank you.
Thank
But
you.
thank you for being here. So, we want to talk and dive into right away because I know this is going to go into many different areas. But the number one question I'm sure you get, especially as metals are rising, and whether it's in a TFSA, whether it's in just regular storage, whether it's in RSPs, as the metals rise, people
hmm
go, oh, storage fees. Oh my God, I want to put it in my backyard. I want a bed. What am I going to do? So I'm going to hand the floor over to you.
Well, look, everybody's price conscious. I get that. In fact, w we want that. We expect it. We can talk a little bit about what I think is behind it. But
Mhm.
if I have someone who calls me out of the blue and they're not price conscious, I know that they're a criminal. It's
Oh,
like the
wow.
first it's like the first red flag.
Wow.
So you never asked me how much this cost. You never
Oh,
asked me. You never asked me about price. You never asked me these things, and it's just like you rushed right through to I want to buy this. There's only been two occasions in like the last 5 years
wow.
where it's like the person was legitimate, and we were
Oh,
just. But we have to protect our goods, and
for
that's really
sure.
a good red flag when someone's not price conscious.
Yeah. Yeah.
Um, to me, I think one of the reasons, I would say two reasons why people become price conscious is the first is that if this is a new arena for you, it's the one thing you can control is the
Mhm.
pocketbook. That right? If you're new to it, you go, well, it's my money and I hold the cards, right? So I'm gonna dictate from the cost perspective because I don't know a lot of these nuances and perspectives that we're gonna talk about, right?
Yeah.
The other is also, and so how can you not respect that,
Hmm.
right? How can you not
Yeah.
respect anyone looking at these vehicles, physical
Mhm.
or otherwise, and say, yeah, it makes sense. You should try to understand it from the cost perspective. The other thing is also not, I think, is also not knowing where it can go,
Hmm.
right?
Yeah.
Because if you knew then what you know now, cost wouldn't have been an issue. You would have loaded the boat, right? So it's also a
Hmm.
question of the future and where things can go. So that's kind of where I start with just the idea of being price sensitive.
And I like that because I do have I want to rattle off some of the questions if you're okay that I've heard and that people ask. So
Sure.
and let's go through them and see where we go because
I
I,
love
I
it.
think it's interesting. So one question that somebody posed to me recently, she said, okay, I bought 6 years ago. I've paid every year this amount and it changes and fluctuates. So really I'm only today, this year's been great. So I'm really only up 6%. And I was like, okay. What do you say to someone that says, I've been holding for, in their perception, a longer term storage. So am I getting my value when they back out their storage fees?
Well, you know, I don't know the person personally, but I can tell you that if someone's been in the market for like 5, 6 years and they're only up 6%, then first of all, it's impossible because the market's doubled in the last year.
Right.
Okay.
Well, they're saying
It-
if they back out their storage fees. So
but
I don't know
storage,
how much they have. I can't tell you
uh,
that. All I can say is
well, look, storage is effectively 1% a year for real product.
right.
Okay.
Yeah.
So if the market's up 100% this year, then 1% is a very nominal cost of doing business.
Mhm.
And there's been a period of time where maybe silver wasn't moving up, 20% a year. And I always say, like, if gold's going up or silver's going up 4 or 5% a year, then a 1% cost of doing business is a problem. But
Right.
gold's up 900% in 20 years. Silver's up
Yeah.
750% in 20 years. So it can be a problem for a year or two,
Hmm.
right? But not long term in that
Hmm.
in that regard. Everybody, and that's just kind of a funny thing about it. I think the key from what I'm hearing of that person is they're treating it like an investment and not like an asset.
Okay. That is exactly where I want to stop you. I'm so happy you said this because my my response to a lot of people too is do you know what you pay in investments in terms of if you're holding a certain fund or you're holding XYZ, you're paying fees. And I go, yeah, but I don't see them.
Right.
Okay. So is it possible that the fees become more triggered for a person and then they want to hold it at home? Because I do have a few questions around here that have been posed. I want you to answer.
Hmm.
Um, that's partly their block because this you're actually seeing real amounts. You're seeing them every month. It's coming in. Whereas if you're investing, and I want you to talk about the difference between the investment, like a mutual fund versus the asset. So people understand that as well. But could that also be a block? Whereas these are kind of buried and this one you're seeing every month. So two questions, the
Um,
asset
well,
investment and the
it's a
fees.
catch-22 because in the precious metals business,
Mm-hmm.
people want full transparency. If
Mm-hmm.
I'm going to own this asset, I want full transparency. But in
Yeah.
the investing world, it's sweetie, you got 6% a year. You should be pleased as punch. That's fantastic. Oh my gosh, right? And you're sitting there going, well, 6, 7, 8%, you're barely beating inflation. And I hope you're not paying capital gains on that too, right?
Oh, someone
So,
said to my husband, "Oh, you should be happy. There, this one was 2%." He's like, "Excuse me."
but as well though is registered accounts aside, physical gold and silver is private wealth. It's private
Mm.
wealth. Um, sorry, your question was.
So, can you do two things? One, let's start this one. When do you think that people have a harder time when they see the storage fees because they're actually getting a bill every month versus how it's kind of
Right.
buried
Okay.
into the investments over
Right.
here? And then
Okay.
that's question one.
Okay. All right. So in that case, again, really that comes down to you haven't made the money yet, so you don't know, right?
Okay.
And no
Yeah.
one, and not no one, but a lot of people have a tough time outlaying, not knowing where it can go. So it's
Hmm.
it's a lack of faith in where the market is, but it can also be a lack of understanding of why are you buying this in the first place, right? So let me give you a couple examples of sort of come to Jesus moments, okay?
Hmm.
So I've had clients in registered accounts where they say, okay, I want to hold back a certain amount of money. Maybe I'm going to put 60% in the metals and I'm going to hold back 40% for for other things, cash, etc. And
Hmm.
they put the money into GICs, getting 3%, maybe 4%.
Hmm.
And inevitably, they get rid of the GICs and buy more metal.
Hmm.
Because once your metal is up 25%, who needs a GIC? Right? You know that the GIC is not beating inflation, but once you see the performance of gold and silver, then all of a sudden you're happy. All of a
Hmm.
sudden, well, I don't need 3%. I'm getting much better over here. And storage as well ceases to be an issue, right? When you've made the money,
Yeah.
right? Until you're making the money, it's an issue. But this is also the case of owning something. And in that regard, I mean, just think about property.
Perfect. So
So,
now
so
for
that
people
person,
listening, you're going to go why this is an asset versus the investment, right? The property?
so
Okay.
well, look, people buy properties they treat their principal home as an asset, like an investment. But
But it's
there's a
not.
similarity and then there's a difference.
Yeah.
The similarity is both are assets in the sense of there's a cost to acquire them. So if
Yes.
$1 million property might cost $80,000 extra to buy it, no one cares because it gets buried into your monthly whatever. But it's there, right? Land transfer, your agent, your lawyers, your moving scenarios, and then there's your taxes every year. There's
And
the
your
cost to
ongoing
run the
maintenance.
property, the maintenance,
Yeah,
exactly.
your roof, your
The difference
furnace, your
is,
yeah.
yeah, the difference is in this respect is no one cares.
Mhm.
Why does no one care? Because they're not thinking investment, I'm gonna flip this in a year, right? They're thinking it all goes up, right? So I can rationalize those expenses because it's real estate and I think it can go up. The biggest difference between gold and silver is there is a lot less cost of doing business, and when you want to sell, it's liquid, right? I don't have to
Yeah.
list my gold, I just sell it.
I love
So
you
those
said
are some
that.
differences.
I have to say, I love you said that. And I hope this clicks for people listening because I always say your principal home, this is me. And, coming from my background and business for, since I was very young and very successful in business, I said, for me, your home is not, yeah, it's an asset, but it's not, I don't put it in. It should be your lifestyle camp, right? Because it's not liquid. And I love what you just said there is people forget they might go, "Oh, I paid 1 million for my house. I can sell it for 2," which is outrageous. And I think like this. And we were talking about that. However, how much did you pay in property taxes? How much did you pay to move? How much did you pay to get into it? How much did you paint? Did you renovate? Did you change your furnace? Those are all costs of that house. Did you pay it cash or did you pay it with a mortgage? Which, right, the interest on top, if you haven't, you've paid for that house 2 or 3 times over, depending on how you paid it off. So,
We're just not looking at what the actual percentage gain was when you take away those costs.
well,
Because
that's
all
what I
that
mean.
matters at the end is that you have the money in the bank, right? I'll
Yeah.
take the other side of the
Yeah.
argument. All that
Yeah.
matters is do you have the money at the end of the day? And
In the
at
bank.
the end of the day, if you bought gold 10 years ago or
Mm-hmm.
5 years ago, it's worth a lot more today. Same
Yeah.
thing with silver. So the key as well is the perspective of where is it going and why am I buying this? And
Yeah.
so one of the things is that I'm running against recently
Mm-hmm.
is first of all, gold has always been expensive for some reason.
Yeah.
People thought it was expensive when it was $500 an ounce.
Mm,
Okay. And they had a lot more money in the bank.
yeah.
They didn't want to pay for it at 500 and they didn't want to pay for it at 3,000. They were all price conscious all the way along. So imagine being price conscious in today's market when gold was trading at $1,000 an ounce and you didn't want to spend $80 over spot to buy it, right? And that feeling was there the entire time. Like everyone has always been price conscious, but those that took the leap and bought it made a lot of money. And it's
Mm-hmm.
also similar to a business, right? You have to rent a place,
Mm-hmm.
buy the supplies,
Yep.
buy the inventory, hire the staff. There's a
Yep.
lot that goes into it before you've opened the door and
Yeah.
like what comes back to you is, and that's really the key is what comes back to you. So this idea of it right now, specifically right now, we're in the market. Gold seems expensive, but it's not. It's your money isn't going very far. Your money is
Yeah.
way not going far today than it did even 10 years ago,
Yeah.
13 years ago. It is, and gold is playing massive catch up. So, from a
Yeah.
larger perspective here, again, costs aside, why am I
Mm-hmm.
buying this? Because I'm going to get it back. We
Yeah.
did a show on the Real Money Show maybe 8 years ago, 10 years ago, where I said it's silver is savings. You're going to buy
Mm-hmm.
silver because it's your inflation rebate.
Okay. Good way.
You're going to buy it today, and in 5 years or 10 years, you're going to get back all the inflation that you're losing right now. And
Mm-hmm.
inflation is just your dollar's not
Yeah.
going as far. So you want to sit here and say, it's too expensive,
Mm-hmm.
but it's going to be more expensive next year, and so is everything else.
Yeah.
But I don't want to own it because it's too expensive now. What's going to happen is you're going to own nothing. I don't
And
know
be
if you're going to be
happy.
happy, right? But people ask me about confiscation. This is confiscation. Being
Hmm.
concerned about not being able to afford that asset and
Yeah.
not buying it, it's only going to get more expensive, right?
Yeah.
From here, and we can talk about the fundamentals,
For
but
sure, for sure. So what going back, because people ask this, so how did they come up with the 1% fee? So people know, because a lot of people don't. How did they come up with that? Okay, let's start there first. I have a few questions behind, but let's start there first. How did they
okay,
come up with that
so
number?
again, part of this is I feel like conflating, especially with registered accounts,
Yeah,
conflating an asset versus an investment. Okay.
correct. Yep.
So this is an asset,
Mm-hmm.
meaning Royal Canadian Mint has
Mm-hmm.
sourced material,
Mm-hmm.
refined the material,
Yep.
fashioned it into a bar or coin,
Mm-hmm.
packaged it if needed. So they pay for the packaging,
Yep.
and then it gets wholesaled
Yep.
and retailed.
Yep.
So same thing as a t-shirt.
Mm-hmm.
Cotton is sourced,
Yep.
designs, fabrication, wholesale,
Yep.
retail. Lots of hands, right?
Mm-hmm. Mm-hmm.
Lumber, you're buying a desk,
Yep.
sourcing, refining,
Yep.
manufacturing, wholesaling, retailing,
Yep.
on and on and on.
Yep.
Food, right?
Mm-hmm.
No one says what was the exchange rate when I'm buying strawberries from California, if you could still do that.
Oh my God.
What's the exchange rate I'm paying? No one cares,
Yeah.
right? My
Yep.
cost is my cost. So the first thing is that it's very different to buy an asset especially a registered account
Mm-hmm.
or
Mm-hmm.
versus investment.
Mm-hmm.
So the alternative is paper. The alternative is I put the money in, but I don't own anything, right? I'm
Mm-hmm.
get to storage.
Yeah.
So
Yeah.
there's pool accounts,
Yeah.
there's digital gold, there's ETFs, there's
Yeah.
gold-backed funds, gold, silver.
Yeah.
All it is these are vehicles where there may be physical gold stored somewhere, but you
Keyword
don't own
maybe.
it.
Maybe, like you just said. Keyword is maybe. You don't
Well, like
know.
yeah, like JP Morgan, probably not.
You don't know.
Sprott, probably, right?
Hmm.
But the point is that you can't take delivery of any of this. This
Correct.
product is not yours. You've paid
Yeah.
for it, but it's not yours, and there's still a storage fee. Okay.
Yeah.
Now, their storage fee is less
Mm-hmm.
because it's a massive pool.
Mm-hmm.
So the custodian at the vault where the physical product is being stored, they're getting a discount because it's a massive holding and it doesn't move.
Oh, so okay, so I didn't know this. So just to make sure I followed you right. So if you bought, which I don't do it because I don't like it. I kind of have that belief, you and I've had this conversation, you don't hold it, you don't own it. So if you buy an ETF, is what you're saying is that you still are paying a little bit of a storage fee to own
Of
that
course,
ETF. Oh, I
of
didn't know that.
course.
I learned something new. Okay.
ETFs,
Yeah.
gold-backed funds, pool
Hmm.
accounts, you're still paying storage.
A little bit of storage fee.
And
Okay.
sometimes there's management fees as well, right?
Okay.
But the thing is you're paying for something that you have no access to and do not own, right?
Correct.
Now
Yeah.
they're
Correct.
lower because they're much bigger, it's
Hmm.
much more volume, and there's nothing moving,
Okay. Makes
right?
sense.
There's a lot
Yeah.
less complexity and it's a lot bigger. So for us, the difference is each individual client is getting their own individual sub account. The
Hmm.
product is being put in. I
Hmm.
call them the Oompa Loompas, but they're not. They're people working at Brinks, but it's the behind the scenes. There's someone literally behind the scenes getting an order saying, okay, I have to create a sub account. I have to put
Hmm.
this specific product from over here into this account,
Yeah.
right? Lock the box, zip
Yeah.
tie it, barcode it, put it all the way back on the shelf, and
Yeah.
report back saying, this is what we've accomplished, and this is
Yeah.
for that client, right?
Yeah.
So it's not an invisible thing in the ether. It's actual physical gold
Yeah.
or physical silver in a vault,
Yeah.
fully insured, fully secured, theft, fire, whatever it is, the product is safe, okay? And liquid. You can buy and sell that on a phone call.
On a phone call.
And it's
And that,
yours. You could take it home.
yeah, well,
Not in an
yeah.
RSP, but well, if you
Right.
deregister.
We were
Yeah.
curious this weekend, I have to say, because I do have a question here. But as a funny side note, the guy I think you bought recently that was talking about, was it 53 ounces or something, or 53,000 ounces of silver? Do you see that
David
guy last
Baker.
week? Yeah.
Yeah,
Okay.
David Baker.
Well, I wanted
That
to
was just
know.
a new purchase. He bought like
Yeah,
half a
yeah, a new
billion.
one. But I wanted to know. So I asked Chat GTP because I'm curious. I'm like, they said to put 53,000 ounces of silver, you would need two big pickup trucks. So I'm like, whoa, because I wanted to make perspective, which goes to
Yeah.
what you're saying. But that, so I thought, yeah, you're not going to be carrying that, I don't think, at home. I don't think you want that anywhere. I don't even know if your basement could
No.
hold that. But so with the 1% that they came up with for this, but that also, like you said, would you say a bulk of that is also insurance to make sure if something happened? Because I don't know, but I'm
Yeah,
just asking.
it's you're paying for the storage and
Yeah.
you're paying for insurance.
Yeah.
And then depending on the company, depending on like what the deal is, there's
Hmm.
there's always like a little bit of a kickback as well,
For sure.
right?
For sure. Yeah.
Um,
For sure.
Now, again, the cost of, let's just say 1%, because it can vary. In the registered accounts, it's 1.25. And then
Okay.
depending on volume with Guildhall, it can go
Hmm.
down from
Okay.
1%. Again, these are like, I'll give you an example. I had a client who was buying a lot of silver, was taking delivery, he was self-storing
Hmm.
for all of the reasons we're discussing here today,
Yeah.
right?
Yeah. For
I don't
sure.
want to pay these extra fees. Yeah, that's fine.
Yeah.
Um, it is no longer a problem, right? And so he wants to bring it back. Um,
Oh,
but there are logistic issues of bringing that product back and getting it to a vault.
okay.
And look, over a 5-year period, is 5% what we're worried about? Like this is
So
a
what
much
are
bigger
his,
question. Are we
yeah,
really worried
yeah,
about 5% cost of doing business
yeah,
if over the last 5 years, I'm just looking at it, silver's up
yeah,
164%? Are we
yeah.
really worried about 5% here? Because I would hazard a guess that we're flipping a coin whether that really matters.
So can
Like,
you expand on this gentleman for teaching moments for people
yeah,
listening? So now he wants to bring it back. One, what are his logistic issues and what are some of the things? One, I imagine it's heavy and got to carry it all, but um why did he call you now and say, I need to bring this to you after all these years of saying, I'm not going to pay these fees?
his his main voiced concern
Hmm.
was security.
Yeah.
The underlying for me
Yeah.
was, well, now it's become economical to do it, but
Okay.
it's not so easy. It really isn't that easy to just, we can't just
Yeah.
have you roll up to Brinks and put product in. It's not that easy.
Yeah.
So scheduling these things is going to be quite difficult. But
Yeah.
I'm not saying that doesn't mean it's a bad idea. I
No,
think it's a
no.
great
Yeah.
idea, but
Yeah.
so yeah, but I
So
think
there
what
was
it
a
comes down
shift in his
to,
brain, though. So what was the shift? You think the shift in his brain? So people listening, going, "I want to keep this at home," and you're accumulating, or you want to. The shift in his perception was, "I don't want to carry the risk if something happened to this anymore." Correct?
correct. And
Okay.
I'd probably go further and say it was fine when it was worth duh,
Yeah.
but now it's worth duh, and it's become that much
Well,
more valuable as well. So
if you have $100,000 that your silver's accumulated and you've been accumulating for so many years, all of a sudden you wake up and now it's, I don't know, $1 million
300,000.
or
Yeah.
300,000. Yeah, it's, do you want to risk that? I don't know.
It is. It's
Yeah.
that realization of, oh, it's that much more valuable,
Hmm.
right? And there's that much more risk, and I can rationalize the cost of doing business now, right? Which
Yeah.
is
And
normal. Which is normal. Why do
yeah.
they put now? Okay, so why do they put fancy retail stores around the casino? Because when people have the money, they're
They'll
happy to
spend.
spend it.
Yeah.
And we're living in a country right now where we are being constantly constricted, and
Hmm.
we don't realize how much we're not spending. We love
Hmm.
Costco. Why?
Yeah.
I don't know. I don't shop there, but like, because it's cheaper, right? Okay, so everything is about making cheaper economic decisions.
Yeah.
But what about the decision that's going to help you make a lot more money and keep your lifestyle?
Yeah.
Again, this goes back to, is gold expensive or is your dollar not going as far? So when we think about what's happening in the gold market right now, and I think this is the key
Hmm.
takeaway,
Yeah.
because it's just rising above cost issues.
Yeah.
We're in a market where since 1971, they lifted the gold standard and forced everyone into cash.
Correct.
And to assist with that, this is a review for most people.
Mm-hmm.
And to assist with that, we're going to make it volatile through the futures contracts. Okay. We're going to tell everyone gold is a relic,
Mm-hmm.
that it doesn't pay a dividend. So we're going to make it seem like investments are way better than holding gold.
Mm-hmm.
Right. And then we're going to disparage them by calling them gold bugs or conspiracy theorists.
Yeah.
And then if all of that fails, we're going to offer them the paper. Well, buy the certificate, buy this, buy that. It's way better than storing it yourself, right? So if everyone's out of the market, they can use the paper to control price, which is what they've done for 50 years.
Yeah.
Now, that 50 years is done.
Mm-hmm.
I'm telling you, it's done
I agree.
because all of these sovereign wealth funds and
Yeah.
central banks and countries that believe in sovereignty or countries that see where the wind is blowing are saying we need the gold.
Yeah.
The fiat version of whatever this is has come to its natural conclusion, and we need the gold. And so the suppression is ending.
Mm-hmm. Yeah.
And if the suppression is ending, and I've talked about this for a long time,
You
once
have.
silver gets to $50 and people realize, oh, that was just a soft target.
Yeah.
So now that it's been digested, it's what is the real price? Like
Yeah.
what's the value of silver so that we can derive what the fair market price is?
Yeah.
If you understand that that's what's happening, then you understand that you have a generational opportunity, okay,
Mm-hmm.
to own an asset that is being revalued globally
Yeah.
much, much higher because
Yeah.
it levels the playing field for everyone. What central banker is going to say, I don't want to be rich,
Yeah. None
right?
that are out there right
Why are they
now.
buying, why are they buying gold? Because they know it's
Yeah.
going to make their central bank
Yeah.
rich. Why are
Yeah.
these countries buying gold? Because it keeps their sovereignty and will make them rich.
Yeah.
So if gold only moved up 15% a year for the next 5 years, you're into $8,500.
Yeah.
Okay,
For
that
sure.
that's an under conservative estimate of where gold's going. And if you look at silver with its 5 year deficit and the industrial demand on it,
Mm-hmm.
and the fact that what we're talking about here,
Yeah.
expenses,
Yeah.
economic decisions, as gold goes up and people say $7,000, that's really expensive. But you know what? 150 for silver sounds pretty cheap. I'll
And that's
buy
when
that.
people will be lining up, right? They look at it and go, "Oh my God, it's 150. I
So
better get it." Yeah.
So a couple years ago, silver was in the 20s. It had come down
Yes.
from 34. And
Yeah.
I was telling clients, look, if silver gets back up to 28, 29, the market will feel it's inevitable it's going over 30. And
I
it did.
remember
And
you
then it
saying
really
that.
ran. And I said,
Yeah.
okay, now that we're in the 30s, this is going to move a bit quicker, but we don't need 39. We only
No.
need like 37. Because at
Yeah.
37, people will say, this is inevitably going into 40.
Yeah.
But keep listening. At 40, I said, but at 40, we go to 50. It's
Mm-hmm.
not, can we get from 40 to 47 or 48? It was, we get 40, it's inevitable we're hitting 50. We hit
Mm-hmm.
50, we digested, we're talking about silver, we digested, and now it's, so where does it go from here? Well, now it's moving in basically $10 increments.
Yeah.
And once you break 100,
Yeah.
you're talking $100 increments. And
So
$100 silver, you're going to have regular Joe investor saying, well, I mean, Nvidia, I don't know, what's Nvidia, $600 or something? Like
yeah.
there's lots of stocks out there that are multiple
Yeah.
hundreds of dollars. Silver's cheap still. It's still
Yeah.
cheap and still not being noticed. So what's it going to look like when silver goes from 60 to 120 or higher? I myself
Well,
don't even want to talk to you about where we think it could go, what real value looks like. But if you just look at, well, I think it can double from here, or gold, I
yeah.
think it can double from here. If you think it can double from here in the next 5 years and your cost to acquire it is, let's just say 10%, including storage for the next 4 years,
Mm-hmm.
what are we
Nothing.
talking about?
I
What
want
are
to
we talking
I
about?
do want to touch on that little bit you said there, but I do want to say something because you and I we've been doing a lot of podcasts and our community loves you and like long before this 2020 for sure. And one of the things I remember you were saying, and we had a conversation, you were like, it'll move it would move 10 cents or 15 cents a silver, right? And we're like, oh, and you're like, yeah, then it'll move a buck or $2 or whatever. And you think in your head, well, now we see it moves 50 cents in a day, and you're like up, down, $2 in a day, up, down. You're like, wow, here it is. I remember you saying it's when we start to see these bigger jumps, what's moving. And before, like if we went back to say 2019, if you saw that dollar jump or $50 jump, you're like, wow. Now it's like, yeah, okay, it's jumping a dollar, $2. Pretty soon we'll be looking at that. Oh, it went $5 or $10, like you said. It's and I say this because getting to know you and how amazing you guys are, and you're always very cautious, you're very do your homework, and I love this. But now that we're seeing it, and like you said, like back to the growth. And I know a lot of analysts that you see, I don't see as many as you do, but they are, a lot of mainstream bigger guys are now saying, don't be surprised to see $200 silver or $300 silver US. Well,
Yeah.
okay, if we're in Canada, do the math, reverse it, if you're taking anything out. But when you're talking about, that storage fee as it increases, I really hope that that's what people will look at, because there's something that I said to someone, wouldn't you rather see, and maybe I'm wrong to say this, so you can cut me off here, but I said, you can use your fiat right now to pay your storage fees while this is going up. Wouldn't you rather use your fiat that's going down in value to pay the storage fees right now because you can, versus liquidating an asset that's going up? Is that a wrong way to look at it?
No, I think that falls in line exactly what we're talking about, right?
Okay.
It feels expensive now because
Yeah.
A, you don't realize how much your wealth has been eroded by having it in the fiat system. And
Yeah.
people get lucky in the stock market. Sure, there's winners in crypto and there's always winners,
Yeah.
right? There's
Yeah.
always people who are like, so how are you feeling about the economy? Well, the guy makes $450,000 a year. He doesn't care, right? It
Yeah.
doesn't
Yeah.
affect him. But
Yeah.
but it does affect you because
Yeah.
it's like, so because you're making all of these other economic decisions. So the fact is
Yeah.
that it's already happened to a big extent, but the
Yeah.
gold market hasn't completely revalued that much higher, and that's the opportunity.
Hmm.
So is gold expensive or is your currency crap? Right?
Yeah.
I spoke to someone today.
Yeah.
He said, well, what would happen if the currency collapsed? I said, it's already happened.
Yeah. Yeah. It has.
But
Yeah.
and gold and silver don't move, 1 to 1 to inflation. They've already
Yeah.
performed great against it.
Yeah.
But we're talking about, what about the trillions of dollars, the hundreds of billions of dollars that have been put out into this system that have
Yeah.
forced you to be, look, we just talked before we jumped on, right?
Yeah.
In the 30s, an unskilled laborer made $1,500 a year, give or take.
Yeah.
At $35 an ounce, that was 42 ounces of gold. Today, that would be over 250,000 Canadian for an unskilled laborer.
Yeah. It's
Okay.
crazy.
On 250,000, you can basically have a one
Yeah.
income family, have a
Yeah.
couple kids. I don't know what your vacation looks like. You're driving somewhere, but
Yeah.
you're doing pretty good, right?
Yeah.
That's
You're
unskilled.
maintaining.
Imagine what skilled is. We
Yeah.
have no idea how much wealth we've lost.
Yeah.
And what I'm saying is that everyone understands that gold and silver are money. Now, here's the thing. You just talked about like social media and like
Yeah.
people talking about bigger numbers, right?
Yeah.
Well, I'm
Yeah.
starting to see in social media that AI generated or not,
Yeah. Yeah. For
this
sure.
idea of, oh, gold and silver are money, they're protecting against inflation. Basically, everything we said 10, 15 years ago,
Yeah.
everybody's starting to learn about it. And I'm thinking, yeah,
Mm-hmm.
crypto was a gateway fiat,
Mm-hmm.
like a gateway
Yeah.
currency rather,
Yep.
to start to understand what money is. And I
Yep.
always kind of knew that that was going to be the case.
Mm-hmm.
And now because silver and gold are moving, there is an education happening of what money is. And the
Yep.
main thing about money, I think this wraps it all into a bow,
Yeah.
is what's the difference between money and a currency? Currency is a unit of exchange. Gold and
Mm-hmm.
silver have been currencies,
Mm-hmm.
but more importantly, they were money, and
Yeah.
money is a store of value. Okay.
Correct. Yeah.
When you're bartering, it's I need low stock to flow. I don't need your pig.
Yeah.
Okay. Give me
Yeah.
something else that I can use
Yeah.
in a year, because I don't know if your pig's going to last that long, or
Yeah.
your grain. Give me
Yeah.
something that I'll be able to buy the same amount that I can get for your pig.
Yeah.
Right? I don't know
Yeah.
why we're using a pig.
Yeah, but
But
it's
so
true, and it's very true. And I think when people compare those two different markets, they're not comparing the same thing. You're comparing technology to actual money, like they're just totally different
right, but
areas. So I think that's what you're
gold and
saying. Yeah,
silver are a store of
of
value.
value.
So if you've held gold as part of your portfolio for the last
Yeah,
20 years, inflation has not
yeah,
robbed you of anything. You've kept
yeah,
up with your lifestyle. You've
yeah,
improved it. And that is going to continue because the lid is
yeah,
just coming off of these markets. Yes, they've
yeah.
performed well, but they're just
Just
coming off.
starting. Yeah,
So
they're
if
like
they're just
creeping.
starting, and then so what you'll see, this is great.
Mm-hmm.
This is my something I
Yeah.
notice, okay?
Mm-hmm.
You have these guys out there and gals like
Yeah.
Lynette Zhang,
Yeah.
Jim Rickards,
Mm-hmm.
Mike Maloney.
Yeah.
You'll have people who have run the numbers
Yeah.
and they'll say gold to 27,000,
Mm-hmm.
gold to 20,000 or 18,000, right?
Mm-hmm.
And then on the other side of the spectrum, you have the banks and they say, yeah, we think gold can get to $4,500 in 2026. We're at
Mm-hmm.
4,300. Okay.
Yeah.
They're just sort of front running it a little bit, but you
Yeah.
see the scale,
Mm-hmm.
right? You got to be somewhere in between that, right? Like for
Yeah.
me, I don't quite let myself go to Jim Rickards land,
Mm-hmm.
but I look at the banks and I go, well, they're not calling for $500 gold. That would be
Yeah.
impossible because you can't
Yeah.
mine it at that price.
Correct.
So you start to kind of let yourself allow it to
Mm-hmm.
happen a little bit more. But when
Yeah.
we look at what's going on in the market, we see JP Morgan got out of their short position.
Yeah.
They are now net long.
I
Okay.
saw
They are
that.
not looking
Yeah.
to manipulate the market. Right now,
Yeah.
calls for delivery on the COMEX, 100% of December contracts want the physical.
Mm.
It is
Yeah.
now in silver, it's a strategic metal.
Yeah.
That means it's a national security issue to
Yeah.
not be letting that out of the country or use
Mm-hmm.
or right. India is now using silver. You can bring your silver to the bank and they will give you a loan against it, a high
Yeah.
quality liquid
Well,
asset. So you could, imagine you have $1 million in gold
yeah.
and you want to invest in a property, right?
Yeah.
You can borrow against it.
Yeah.
You
I
don't need
think I
to
think
be
that's
beholden to the bank.
yeah, that's lovely. You can do that. And I think that goes to also a benefit too. I'm going to go with here with what you just said with storing it because they can know it, they see it, it's there, it's insured. So they're more apt to probably want to be able to leverage off it or use it versus cashing it in for something because it's right there. There's a record of it. They know what they have. And I think that's a really well
Well, I
said. And
think, yeah, and I think sometimes just on the storage side, we haven't really talked about like the
yeah,
cost to buy in, but
yeah,
just on the storage side, you'll see these YouTubers and stuff, and they'll say
yeah,
what we say, if you can't
yeah,
hold it, you don't own it.
yeah, yeah,
So they give the impression, but these guys are small fries. No offense, they're small
they
fries.
are.
They're like if you're gonna have 300 ounces, like why? Yeah, you don't
Yeah,
need a storage account for that.
yeah,
But what kind of storage? Is it
yeah,
allocated? Is
yeah,
it segregated?
yeah,
Do you have access to audit it? Can you take delivery?
yeah,
Right? Um, what kind of storage facility is it? Is
yeah,
it reputable? These things.
yeah.
And once you start to add all of that up, you go,
Peace of mind too.
having a vault like Brinks,
Yeah,
it's a counterparty that's assisting you,
yeah,
but it's not a counterparty like an investment, right?
correct.
So if
Yeah,
we just think of like a storage center, you're
yeah,
moving your home and
yeah.
you got to put the stuff in the storage center. They're providing a service.
Hmm.
It's all your stuff in that locker. It's
Yeah,
all your stuff. Does the storage facility have a claim on it?
no,
No, not unless you don't pay your bill for five
Yeah.
years,
But somebody
right?
could also break into that. They don't insure what's in your storage unit for you. I
Well,
don't
fair enough.
think. Yeah, like,
Thank you.
right?
Thank you
They
for
don't.
adding that nuance.
Well, they don't, right?
I was
So,
just making the point of
but
like,
yeah, they're not
if
gonna,
they are a
if
third
somebody steals
party,
your stuff, they steal your stuff, whereas you've got
right?
security to say, and I think that's like two
Yeah.
things that I get, and this is how I respond. And if I'm wrong, please clarify it. When somebody said to me, well, I'm in Canada, but I have to pay US dollars to store it. And I said, well, because
Ah,
it's
okay.
valued in US dollars. If
That's
something
yeah.
happens, you're going to get it returned to you in US dollars. Am I wrong to say that?
Okay, I'm glad you brought up the US dollar thing. So first, when you're buying the metal, okay,
Yeah.
it is valued in US dollars, just like oil.
Yeah.
It's a reserve
Yeah,
currency,
for
so
sure.
everything's valued in US dollars first.
Yeah.
If we're not transparent about that, then
Mm-hmm.
what would happen is we would work off the Canadian spot price,
Mm-hmm.
and it would actually cause a lot of questions because all of a sudden we're hiding the how the cost is made up
Yeah.
and just giving you a random Canadian price. And it actually causes more issues because what's the price you're seeing every day? You're seeing the
Yeah.
US price,
Correct.
right?
Yeah.
So, like spot price US Canadian, spot US for silver right now is 60, just under 64.
Yeah. Yeah.
It's like in the 90s to buy it in Canadian,
For sure.
right? For
Yeah.
like landed with all your costs.
Yeah.
Um, the fact is that with regard to the US currency and it being valued in US dollars,
Mm-hmm.
besides the fact that no one cares if their Apple stock is valued in US dollars,
Yeah.
that's part of doing business
Mm-hmm.
sometimes. But ultimately, you're hedging your Canadian dollar.
Yeah.
Because once you own the product, despite how you have to pay for it,
Yeah.
once you own the product, it's a universal asset.
Right.
So if gold goes up, like I'll just pull up a chart here. Gold goes up 61% this year in US dollars,
Mm-hmm.
57% in Canadian dollars.
Mm-hmm.
All of these currencies are doing the exact same thing, which is devaluing,
Yeah.
right?
Yeah.
So ultimately, it is a universal asset. And yes, you're losing a little bit of a cost on the exchange.
Yeah.
That's where you're losing a little bit.
Yeah.
But most, I know with Guildhall, it's very
Yeah.
reasonable. And
Yeah. Very small.
it's not a big amount. But
Yeah.
again, everything is okay. My dad has a saying, okay.
Mm-hmm.
When money stops coming through the door, love flies out the window, right?
Oh,
And
your dad.
the
Yes.
opposite is true,
Yeah.
right?
Yeah.
Again, the casino and the Tiffany's
Yeah.
right by the
You
casino.
got it.
When you're
Yeah.
making money, you don't care. Believe
Yeah.
me, I have seen people take their
Yeah.
profits in gold and silver. We can't tell them how to spend it.
Mm-hmm.
And the way they spend it is crazy sometimes,
Yeah.
right? What they do,
Yeah.
you know?
Yeah.
I can't even describe it. Or when people sell, why they sell. I had a gentleman sell at $47 an ounce silver. I said, do you mind if I ask why? He said, it hit my target.
Well,
I knew better at that point to argue. And I'm pretty good at
yeah.
protecting clients because
Yeah.
now that's another point. Am I making a lot of money?
Mm.
I know it's a nice tie,
Yeah, it
but
is a nice tie.
I'm not making a ton of money
Yeah.
to
Yeah.
sell physical gold and
Yeah.
silver.
For
Okay.
sure.
The
For sure.
premiums, here's it. The premiums are so, I hope
They're
people have
small.
stayed this long because
I
this is
hope they
like the
did.
real gold
Yeah.
nugget of the whole
Yeah.
thing. The premiums are so low, we can't sell it using credit cards.
Correct.
We
Correct. Yeah.
can't absorb the
Yeah.
credit card fee
Yeah.
of what it would cost for you to buy gold. The
Correct.
credit card fee is 2.75%. If I added an extra 2.75% to your gold purchase,
Yeah.
you would bulk at it. You'd run like your hair was on fire.
Yeah.
So it just goes to show you that the premiums, and this is why you buy bullion, because you're not
Yeah.
buying jewelry, you're not paying for retail, you're not
Yeah.
paying for the craftsmanship, you're buying
Yeah.
the straight ahead lowest cost without going to paper, owning
Yeah.
nothing.
Yeah.
And the premiums are very low. And we've had to actually lower the premiums
Mm-hmm.
right? Because
Yeah.
it starts to look silly,
Yeah.
right? Now, why? I'm not a charity. I don't work
No,
for free.
you shouldn't.
But one thing I can tell you after 20 years plus in business
Yeah.
is if you are heliocentric
Mm-hmm. Mm-hmm.
and egotistical,
Mm-hmm.
and this is about me, not about
Mm-hmm.
you buying the product,
Mm-hmm.
I'm not going to keep business very long.
100%. Well,
Okay.
that's why we all
I
like you because everyone says you're honest, transparent. You're not pushy. You're saying, "What do you want? How can I help you?" Go make an informed decision. Call me later. And I think that that's and you are. I can say with someone who's dealt with you for a long time, you are very transparent, and that's one of the things that people love about Guildhall. And it is small fees when you start to understand that for sure. And I know we appreciate that. I do have another question that somebody did ask though. Can they write their storage fees off?
If it's in a business, yes.
Okay. Yeah.
Um, I can't give tax advice.
No, no, they'd have to
I
go to
think that
their
if you're willing to write off the cost of doing business,
yeah.
you I understand we don't report to the government when you
Yep.
sell your product or buy
Yep.
your product.
Mm-hmm.
So from our standpoint, we don't have to be
Yeah.
um, public to the government about it. It's a
Yeah.
private asset.
Yeah.
So
For
if you
sure.
want to put it on the books,
Yeah.
right, that's going to be your
That's up to
yeah,
each, yeah,
your
or everyone
prerogative.
to see and
But
see.
you
Okay.
can, you absolutely
Yeah, they
can.
can. Yeah. No, well, some people ask and some people may not
Yeah.
care and others may, that's okay. So, so basically, I think too that as we start to wrap up, that people need to understand that the asset's growing, it's changing. And if they could start to move their head and wrap their head around, like you're saying, like what did you say? So silver's up huge this year. Was it 100% this year? I don't know. It seems pretty crazy. Maybe I'm
Yeah,
over
in Canadian doll in US dollars it's up 120. In
120%. Yeah.
yeah, in Canadian it's up 110.
Okay. So
But look,
that's
this is the
huge.
thing, right? At $50 people were like, "Oh, that's huge. It must be over now."
Yeah.
The 100% bias is a crazy thing.
Yeah.
I've made 100%.
Yeah.
I'll call it a day.
Yeah.
Why? Because I'm up 100%.
Well,
What
I
is that?
think I think where that comes from is a lot of planners and a lot of people that I've known in my years of when you're investing and speaking to advisors and stuff. They're like, if you've made 20%, get out. You're good. If you've made 50,
Yeah.
oh, if you've made 100, get out, right? Like they pull you out of these stocks and stuff, which okay, they're taking your profits, right? Some people say, oh, you got to take your profits along the way. So they set the benchmarks. And there is a big push. I've seen it a lot lately too, that you got your profit, then just take it and run away without sometimes looking at, like you said, what are the fundamentals? What is the longer term fundamentals? Is this just a quick run? Like if you're taking a run, take your profit and leave. I think
That's an
every
investment
asset,
strategy.
yeah,
That's an investment. You
exactly. Not an asset
you should
strategy.
gold and silver are negatively correlated to the dollar, the fiat
Yeah.
currency, clearly.
Yeah.
So you should always have that as a hedge of your portfolio to be truly diversified. You need negatively correlated assets.
Yeah.
But gold and silver have been managed price-wise for 50 years, which has
Yeah.
done nothing. It's done two things.
Yeah.
Okay. One, it's kept you out of it.
Yeah.
Two, it's helped keep you poor because they've been able to use inflation to steal from you.
Yeah. For
Okay.
sure.
40% income tax, 13% after tax in Ontario,
Yeah.
inflation probably 8%. They're saying it's
Yeah.
2 or 3. You are forget confiscation.
Yeah.
Okay. That is confiscation when they've got you for over 60% of your income every year. Now, here's
Yeah.
the second confiscation. People are worried, oh, is gold going to be confiscated? It is being confiscated right now by price.
Yeah.
Because at $7,000, when you refuse to buy it because it's too expensive,
Yeah.
they get it and you
Yeah.
don't, right? They
Yeah.
get to
For
keep
sure.
it and you don't.
For sure.
So that is going to be the key here. And when we look at the numbers, silver's done a great job. We've come down from 85 to 1. I think we're now 70 to 1, something like that. It's moved
Yeah.
down quite a bit.
That's huge.
But if you look at, gold over the next 5 years, again, less
Mm-hmm.
than 15% a year from here on
Yeah.
out, and you were to bring silver down to $35, 35 to 1 ratio, which is where we were in 2011,
Hmm.
you'd be staring at $240 an ounce on your silver screen,
Yeah, I
right?
believe
On your
that.
silver screen, on your
On your
screen of
silver,
what
on
your
your screen
silver
of
is.
what it is. And
And
I want to
that's
say
so
though,
what are like, people run into real estate and buy things. People run to buy a
yeah,
car. People run,
yeah,
if you're looking to save money, take the bus,
yeah,
right? Are you willing to take the bus? Stop eating steak and have meatballs instead. Like
yeah,
if you were to actually take, now, if you're on a budget, I get it. If you're pension,
yeah.
I'm not trying to be
No, no, I get
disrespectful,
it. Yeah,
but people waste money in all sorts of places. And
they do.
looking back in my life, I would say, man, I wish I had bought more, right?
Yeah,
I wish I'd put more in my RSP, which I'm like
yeah,
doing more of now.
yeah,
And yeah, I should have bought that watch.
yeah,
Like these
yeah,
type of things. It's
yeah,
like these assets are going to continue to grow,
yeah,
and it's not about investing, it's about owning something. So we can't sit there, and I know I've used this theme a lot, and this is kind of
yeah,
like a wrap-up thing, is
yeah,
don't sit there owning nothing and trying to be happy.
yeah,
Own something. Assets. That's what the wealthy are doing. And this asset in particular, both gold and silver, it's a
yeah,
generational opportunity
yeah,
to really grow your wealth. Get back what you've lost. If you've
yeah.
earned $200,000 a year for 10 years,
Hmm.
you've outlaid $1 million in income tax
Yeah,
plus.
yeah.
Okay. You got
Hmm.
to get that back somehow. It's going to cost you a little bit, right?
Yeah,
It's going to cost you a ticket to get into the park,
yeah,
but you need those assets right now, and the catch up you're going to make. And look, Tracy, 10% of the people make 90% of the money.
it's true.
Not everybody's going to be involved in this market.
No,
Um, and I'm not giving you crypto rainbows here. I'm not saying
no.
it's going to go to 1 million for no reason.
Yeah,
Okay.
yeah,
There is very specific reasons why gold and silver are rising. I want to end on a positive note
yeah,
on why you're doing this,
yeah,
because gold is no longer being manipulated and managed, and silver the way it was 10 years ago.
yeah,
And the drive for that physical is going to keep pushing the market higher and higher.
yeah,
And there is limits. There's a
yeah,
limit to where gold could go. You don't
yeah,
see Jim Rickards saying it could go to 50,000. It's like,
yeah,
look, there's a limit at what point people will
yeah,
just say, I'm willing to sell. The supply comes back into the market and the price starts to fall. So,
yeah.
where that number is, when we look at where the end of this whole market is, we ask two questions. The first is it's a three-parter. Is it undervalued, fair value, or overvalue? And you
Mm-hmm.
can figure that out by looking at your ratios.
Mm-hmm.
And the second question is what's been resolved?
Yeah.
Are you rich again?
Mm-hmm.
Is there a flood of mining jobs in our province? Is
Mm-hmm.
there stores opening? Is there restaurants staying in business and expanding, right? Do you feel the money in your pocket? Do you feel like you want to go on vacation, or that you want to go out and buy jewelry again just because,
Mm-hmm.
right? The way you felt in, 2005,
Yeah.
okay?
Yeah.
Do you feel that way? When
Yeah.
you look around, does everyone else feel that way? Are they all
Mm-hmm.
thinking, "Oh, I'm tightening my belt, da, 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 da,"
Yeah.
or do you feel like you're back, baby?
Yeah.
Right? That's one indication of what's been resolved, right?
Yeah.
But the idea is, on a grander scale of what's been resolved, is, are countries are they improving themselves, right? This guy
Yeah.
on last little thing, this guy on YouTube, Instagram, he gave out the title of the budgets for the last 10 years,
Mm-hmm.
and they were all growing the middle class, like making the middle class richer.
Yeah.
But like you feel it. Can you feel it, right? Is it, I'm looking to go into those stores and I've got the money to spend and I'm happy to spend it, because when people have the
Yeah.
money, they spend it,
They do.
right?
Yeah. Yeah. Yeah.
So that's going to be a big change. And that's when you're going to be able to say, okay, gold, those two factors, I see resolution and I see
Mm-hmm.
it's back to fair value.
Yeah.
Um, and I'm going to start to lighten the load here, like and start to sell off to a smaller position
Yeah.
and enjoy the wealth, right?
And have it. And yeah, you're not going to take it with you. You may as well enjoy it. And if you leave whatever you leave behind, I always say I'm going to live to my fullest. I worked hard for it, and whatever's left, there's nothing left, there's nothing left. I don't care. I'm going to just enjoy
Beautiful.
life. And I think people have to start to look at that as we go into 2026. I think some of the takeaways, if I'm right today, is that I love the analogy that your gold and silver, you got to look is an asset like your home. You're not going to move into your home and sell it, next year because you made 10% on it. You're going to live in it. You're going to grow that over time. Look at the cost that you're putting into your home, which is an asset. Also look at the cost is not very much then. If you compare the two, you've got to be comparing similar, like you said, assets. The 1%, if you're in Canada, yes, it goes into the US exchange, but I like how you put that out there for everyone to really wrap their head around that. You have safe storage. If anything, like you said, gets burnt or stolen or something happens, you have great security, but it will be taken care of and it will be replaced. And that it appears you are the expert, but I've been with you for a long time and we've
Oh,
done some
you're an
great
expert.
shows
Yeah.
that I think this party, like you, is just getting going. And it's, I still feel like you're saying personally, it's just my humble opinion that the party is just getting going based on a lot of different fundamentals. And I thank you for coming and sharing your wisdom and your knowledge. I hope we can do this a lot more in 2026. And people listening, I will have all the links below so you can find Jeremy and be able to ask more questions. And I think these are really good conversations as much as people say, oh, do I want to invest this time? I'm going to say this, and I'm going to say this repeatedly at the beginning of the show too. Again, that if you want to change your wealth paradigm, you need to invest your time into things like this to learn and educate and get over your fears. So, what I find is people say, well, I don't want to spend that 1%. What's your fear? Why? Did you listen to what Jeremy was saying? Did you listen to where it's going? Are you listening to your grandma and your grandpa or your parents that know nothing about it? And I'm not knocking them, but if you're listening to them versus actually taking the time to speak to these experts like Gilt How Well, who've been here for a long time, helping, I know, our community and many people that are listening. This is where you're going to change your wealth paradigm. And I will tell you, the number one thing I get, Jeremy, is how do I change my wealth paradigm? And I want to say you got to get over your fears and they got to start talking to people like you, which is a fear. So if they're willing to get over it, have the conversation. You've just taken, I always say you have to have conviction in something, which you guys do. We all do with gold and silver. You have to take an actionable step, which means you got to make a phone call. You got to ask these questions to people like you, for everybody listening. And you got to know how to ask and talk and communicate and make decisions. But the only way that helps and even starts is by talking to people like you. So I am so grateful that you share all of your knowledge and spending an hour and 10 minutes to get educated again. People want 2-second goldfish. You're not going to change your wealth paradigm by doing that. You need to have the real conversations and listen for the people that stayed. And that's why you have helped so many people. And we can't thank you enough.
Thank you so much. And by the way, that was an incredible summary. I don't know how you did that.
Thank you. Well, I
That was
believe,
like crazy good summary.
but you know what? I'm passionate about this and I'm passionate about people changing their lives. And I know from getting to know you guys and your family, good people, and you have the same passion. And the way it changes by people saying, okay, it's time to get more educated. We can listen to projections all day long. I did a video on, oh, yeah, everybody wants to know what's happening in 2026. No, you know what? You got to start asking these questions. And that's how you change your life, not by just watching YouTube all day long. And that's what we do every day. And this, I know, I am so convicted. When you and I first met and I held my first silver in my hand, I can't explain it to anybody listening, but I'm like, I don't care what anyone says. This is right. I knew in my gut when people told me this was stupid. What are you doing? Go in here. And I just knew. that that's where it was. And that's why I get passionate about what you guys are doing. And it's
Amazing.
proven right.
Yeah,
And we're
oh,
just getting going.
oh, the amount of success we've seen with our clients is just a really nice thing every day to see. And
And that
people are happy. Not, you know, again, nothing's been resolved, but financially, it's great to see people, you know,
you've made a difference in
doing
people's
very well.
lives by doing what you're doing. So thank you.
Yeah.
Is there any final words you want to say to everyone before we go?
Um, Start small. If you're new to it, start small. Don't try to like take off more than you can chew. Start small and build. Um, you know, comfort breeds confidence, and we want people to be comfortable all the way along, right? We don't want to feel like, oh, I've done this big thing and I feel really anxious about it. And if cost is the big issue, then start small, right?
I love it. Thank
Yeah.
you again for being here. And everybody,
Thank you.
to find Jeremy, click the link below. Have a great day, everybody.